Hello, friends. If you are receiving Social Security, or if you know someone who is, what I'm about to share with you could change the amount of money showing up in your bank account every single month. I'm not exaggerating when I say this. Right now, there are people across this country who are owed more money than they're currently getting, and most of them have no idea. Some of them are owed thousands of dollars in back payments. Others are losing money every single month because of a small mistake buried in a government file that nobody ever told them to check. Stay with me until the end of this video because I'm going to walk you through 5 specific things, 5 real actions that can put more money in your pocket if you qualify. Some of these apply to teachers and firefighters. Some apply to widows and widowers. Some apply to anyone who's ever had a job where a paycheck didn't quite match what was reported. And one of them might be the biggest Social Security change in the last 40 years, and yet most Americans have never even heard of it. By the time this video ends, you're going to know exactly what to look for, exactly what to ask Social Security when you call them, and exactly which forms can put money back where it belongs. Let's get into it. Here's the big promise. This video is not about rumors or guesses. It's about real provisions, real laws, and real forms that exist right now in 2026 that many seniors qualify for and never use. We're talking about a law that was signed in January of 2025 that quietly reversed a rule that had been cutting checks for millions of public workers for over 40 years. We're talking about a correction process that can fix decades-old errors in your earnings record. We're talking about spousal and survivor benefits that Social Security will not automatically give you, even if you qualify unless you ask. And we're talking about programs that can knock your Medicare premium down to nearly nothing, which means more of your Social Security check stays in your pocket instead of disappearing before it even shows up. Before we go further, I want you to know this information didn't come out of thin air. I went through the Social Security Administration's own published guidance. I looked at the text of the Social Security Fairness Act. I reviewed how the Centers for Medicare and Medicaid Services describes its savings programs. I looked at the actual SSA forms people are supposed to file, the ones with numbers like SSA 7008 and SSA 44, because those numbers matter. And I'll give you all of them today so you can write them down. This isn't speculation. This is what's written into law and government policy right now. Now, before we get into the 5 things, if you find this kind of information useful, consider subscribing. Here's why that actually matters and isn't just something I'm saying to pad the video. Social Security rules change quietly. They don't send out press releases with confetti. A provision can change in January, and most people won't hear about it until years later, often after they've already lost money they could have claimed. The people who stay subscribed to channels like this one tend to be the first to know when something shifts, and that head start is often the difference between catching a benefit early or missing it for years. Okay, let's get into it. Number one, and this is the big one, so pay close attention. For more than 40 years, 2 provisions called the Windfall Elimination Provision and the Government Pension Offset reduced or completely wiped out Social Security benefits for people who also received a pension from a job that didn't pay into Social Security. That includes a huge number of teachers, police officers, firefighters, and federal employees under the old civil service retirement system. Many of these folks worked their entire careers, paid into Social Security through other jobs along the way, and then watched their own government shrink their check or eliminate it entirely because of a pension they earned somewhere else. Most people affected by this had simply accepted it as the way things were. Here's where things get interesting. In January of 2025, the Social Security Fairness Act was signed into law, and it repealed both of those provisions completely. That means benefits that were reduced or zeroed out are now being recalculated, and many people are receiving retroactive lump sum payments along with higher ongoing monthly checks. If you or someone you love worked as a teacher, firefighter, police officer, or in a federal job with a pension from work not covered by Social Security, this applies to you. The reason so many people miss this is simple. If you assumed years ago that you didn't qualify for Social Security at all because of your pension, you may not be checking your mail or your bank account expecting anything to change. Social Security has been processing these recalculations, but if your contact information, your mailing address, or your direct deposit details are out of date, that retroactive payment can get delayed or returned. The action here is straightforward. Log into your account at ssa.gov, confirm your direct deposit and mailing information are current, and if you believe this applies to you and you haven't seen any change, call Social Security directly and ask specifically about the Social Security Fairness Act and how it applies to your benefit. But that's not the biggest part of what I want to share with you today. There's something else, something that has nothing to do with new laws, that's been quietly costing people money for years. Number two, this one is about a mistake, not a missing law. Every dollar of your Social Security benefit is calculated from your lifetime earnings record, the running history of every job and every paycheck the government has on file for you going back decades. Most people never realize that this record can have errors in it. An old employer might have reported your wages under a typoed Social Security number. A name change after marriage or divorce might not have updated cleanly. A few years of self employment income might never have made it onto the record at all. When that happens, your benefit gets calculated using an incomplete picture of your working life, which means a permanently smaller check every single month for the rest of your life. Here's how you check it. Create or log into your account at ssa.gov/myaccount and pull up your Social Security statement. It lists your earnings year by year. Compare that list against old tax returns or W 2 forms if you still have them, especially from years early in your career when records were more often handled on paper. If you spot a year that looks wrong, too low, missing entirely, or attributed to the wrong person, there's a specific form for fixing it. It's called Form SSA 7008, the Request for Correction of Earnings Record. Filing it, along with whatever documentation you can find, like old pay stubs, tax forms, or W 2s, starts the correction process. People who catch and fix one of these errors sometimes see their monthly benefit increase permanently because the calculation gets redone with the corrected, complete earnings history. And here's the thing nobody tells you: there's no automatic system that flags these errors for you. Social Security isn't hiding anything maliciously, but they're also not combing through your record looking for mistakes on your behalf. It's on you to check. Now, here's where this gets personal for a lot of married couples, divorced spouses, and widows and widowers, because the next one catches even more people off guard. Number three, most people assume Social Security automatically pays you the benefit you've earned, and that's the end of the story. But if you're married, if you're divorced after a marriage that lasted 10 years or longer, or if you've lost a spouse, there's an entire category of benefits sitting separately from your own work record, and Social Security will not automatically switch you over to it, even if it would pay you more. A spousal benefit can pay up to half of what your husband or wife is entitled to at their full retirement age. And if that amount is higher than your own benefit based on your own work history, you're entitled to the higher one. Survivor benefits work similarly but can be even more significant, sometimes allowing a widow or widower to receive up to 100% of what their late spouse was receiving. The reason this gets missed so often is that Social Security doesn't proactively call people up and say, by the way, you might qualify for more money under your spouse's record. You typically have to ask, and in some cases, you have to file a specific application for it, separate from your own retirement claim. A common real world example looks like this. A woman worked part time for most of her life raising children, earning a modest benefit on her own record. Her husband worked full time for decades and earned a much larger benefit. When he passed away, she continued collecting only her own smaller check for months because no one told her to apply for survivor benefits. Once she did, her monthly payment increased significantly, and it was retroactive to when she first became eligible. The action here is simple but easy to forget. If you're married, divorced, or widowed, call Social Security and ask directly whether you qualify for a spousal or survivor benefit, and ask them to compare it to your own benefit amount. Don't assume someone already checked this for you. And what happens next surprises a lot of Americans because the next one isn't about your check going up. It's about stopping money from quietly being taken out of it. Number four, if you're on Medicare, there's a good chance your Part B premium is being automatically deducted straight out of your Social Security check before it even reaches your bank account. For most people in 2026, that's well over $100 a month disappearing before you ever see it. What most people never realize is that there are programs specifically designed to cover that premium for people with limited income and resources, called Medicare Savings Programs, and a related program called Extra Help that lowers the cost of prescription drug coverage. If you qualify for a Medicare savings program, your state effectively pays your Part B premium for you, which means that deduction stops coming out of your Social Security check, and the amount you actually receive each month goes up, even though your official benefit amount hasn't technically changed. This is one of those things that doesn't get talked about because it sounds like it's only for people in poverty, but the income limits are often higher than people assume, especially if you're living on Social Security alone or close to it. A retired widow living mostly on a modest Social Security check might assume she makes too much to qualify, when in reality, she's right in the range. The only way to know is to apply through your state's Medicaid office, since these programs are administered at the state level, even though they affect federal Medicare costs. The action here is to search for Medicare Savings Program applications in your state, or call your local Department of Health and Human Services and ask specifically about Medicare savings programs and extra help. And the final item I'm about to share may be the most important of all because it deals with money that's being taken from people who shouldn't be paying it in the first place. Number 5, this one involves something called IRMAA, which stands for Income Related Monthly Adjustment Amount. In plain English, it means if your income was higher a couple of years ago, Medicare charges you extra on top of your normal premium today. The problem is that Medicare looks at your tax return from 2 years prior to set this amount, and life doesn't always stay the same for 2 years. Maybe you retired since then. Maybe you went from two incomes to one because your spouse passed away. Maybe you sold a home or cashed out a retirement account once, and your income spiked for a single year, but it's not your normal income anymore. If any of those things happened, you could be paying a Medicare surcharge based on outdated information that no longer reflects your real life. Most people simply pay it, assuming the number Medicare sent them is final. It isn't. There's a form called SSA 44, the Medicare Income Related Monthly Adjustment Amount Life Changing Event Form, and it exists specifically so you can report a life changing event and ask Social Security to recalculate your premium based on your current lower income instead of old tax data. Filing this form, when it applies to you, can immediately reduce or eliminate that surcharge, which means more of your Social Security check stays in your account every month going forward. A retired teacher who stopped working last year but is still being charged a Medicare surcharge based on his final higher earning work year is a perfect example of who this form is for. The action is to download Form SSA 44 from ssa.gov, fill out the section that matches your specific life changing event, retirement, work reduction, divorce, or death of a spouse, and submit it with documentation showing your current income. So let's bring this all together. 5 real current actions: the repeal of the windfall elimination provision and government pension offset under the Social Security Fairness Act, which is putting retroactive payments and higher checks into the hands of public workers who had accepted smaller benefits as permanent. A correction to your earnings record using Form SSA 7008, fixing decades old errors that quietly shrink your benefit for life. Spousal and survivor benefits that Social Security will not automatically apply unless you ask for them directly. Medicare savings programs and extra help that can stop premium deductions from eating into your Social Security check. And Form SSA 44, which can lower a Medicare surcharge that's based on income you're not even earning anymore. None of these things happen automatically. That's the thread running through everything in this video. The government is not going to call you up and walk you through this. These programs and corrections exist, they are real, and they are sitting there waiting, but they require you or someone who cares about you to take the first step and ask the right question or file the right form. If you take one thing away from this video, let it be this. Don't assume your Social Security check is locked in stone exactly as it is. Pull up your statement, make a phone call. Ask specifically about the Fairness Act, about spousal and survivor benefits, about Medicare savings programs, and about Form SSA 44 if your income has changed. It costs you nothing but a little time, and for a lot of people watching this, that time turns into real money landing back in their account. If this video helped you, do me a favor and subscribe because there's more like this coming, and these programs and rules shift more often than people realize. Give this video a like if you found it useful, and please Share it with a parent, a grandparent, a neighbor, or a friend who's on Social Security or Medicare, because the people who need this information most are often the ones least likely to come across it on their own. Thank you for watching, and I'll see you in the next one.